today's market closed almost flat. But don't let that fool you. Global markets are fallen even more, especially South Korea's market crashed again. The Middle East conflict intensified. A major court ruling on E20 fuel grabbed attention, and several companies announced their quarterly results. In the next few minutes, I will explain you all the important updates that every market participant should know. Let's begin. Hello everyone, welcome back to Stock Market Meridian. Today is 16th July 2026 and you're watching today's post-market report. Today, our markets opened with a slight gap up and initially tried to sustain in higher level. However, profit booking in the second half erased most of the gains, and both benchmark indices finally closed almost in the neutral zone. But one more important point to note is that despite heavy weakness in several global markets, especially in Asian markets, Indian market once again showed remarkable resilience and outperformed most global pairs. Talking about the sectoral performance, the realty and financial sectors ended as the top losers of the day, while consumer durable and chemical sectors emerged as the top gainers. Now let's move to the global markets. The biggest story today came from South Korea, where the Kospi index witnessed another sharp crash. This time, the major reason was not geopolitical alone. It was the country's own central bank. The Bank of Korea surprised the market by increasing its benchmark policy interest rate from 2.5% to 2.75%, marking its first rate hike since January 2023. The objective behind this decision is to control rising inflation, which has intensified due to the ongoing Middle East conflict, while also slowing the rapid growth of South Korea's massive household debt. Adding to the negative sentiment, the global AA rally is also losing momentum. Heavy selling continued in semiconductor stocks. SK Hynix plunged nearly 12%, while Samsung Electronics declined almost 9% during the intraday trading. Looking at the broader trend, Samsung shares have fallen nearly 26% in just 1 month, while SK Hynix has corrected around 23%. Interestingly, these same two companies had contributed almost two-thirds of the Kospi's gains earlier this year. Now coming to the geopolitical developments, the Middle East conflict continued to intensify. Fresh reports indicates that Iran has started attacking oil refinery infrastructure in Iraq, following recent warning issued by United States. At the same time, Iran has once again warned that if further attacks targeted its infrastructure, the Strait of Hormuz could become a complete red line. This remains one of the biggest risks for crude oil prices. Before moving further, here's a quick reminder. Every morning before the market opens, I upload a detailed pre-market report, and also every evening after market close, I bring you a complete post-market report covering global markets, company results, economic updates, geopolitical developments, commodities, and everything that can impact the Indian markets. So if you don't want to miss any important market updates, make sure to subscribe to Stock Market Meridian and press the bell icon. Now let's continue. A very interesting update has emerged regarding E20 fuel. A consumer alleged that immediately after filling E20 petrol, his vehicle started developing repeated engine problem. The reported issues, including poor engine performance, continuous misfiring, reduced fuel efficiency, and repeated repair visits to authorized service centers. Despite several repair attempts, the problems continued, forcing the owner to spend significant money on repairs. And the manufacturer and dealer denied responsibility, claiming that the vehicle was fully compatible with E20 fuel and blaming the issues on normal wear and tear. However, the Consumer Commission rejected this defense. The Commission observed that since the defects continued even after multiple repairs, it clearly indicates that the root cause had never been properly resolved. In one of the most important observations, the Commission also stated that E20 fuel has now become the dominant fuel available at petrol pumps. Since ordinary consumers has practically no alternative fuel choice, they cannot simply avoid using E20. Therefore, the Commission directed that manufacturer and dealer to reimburse the complete repair expenses along with compensation for mental agony and legal cost. Now here's the biggest question is, this judgment has came out at a very sensitive time when the central government is aggressively promoting the nationwide ethanol blending program. Now the market will closely watch whether Union Minister Nitin Gadkari gives any official clarification regarding this or not. So what do you think about this judgment? Let me know your opinion in the comment section. Now let's move to the company's specific updates. The joint venture between NPCIL and NTPC, known as Anushakti Vidyut Nigam, is preparing to float a massive 28,000 crore EPC tender. This project covers the nuclear island package involving the construction of four 700 megawatt nuclear reactors at the Mahi Banswara, Rajasthan Atomic Power Project. This will significantly strengthen India's long-term baseload power generation capacity. Next, ACME Solar has successfully raised 2,647 crores from REC Limited. The fund will be utilized for developing a 450 megawatt by 1800 megawatt per hour farm and dispatchable renewable energy projects. These projects combine renewable energy with battery storage, ensuring uninterrupted clean power supply even during non-solar hours. Next, Swiggy Instamart has partnered with HPCL to launch LPG cylinder delivery services. Currently, this service is being introduced only as a pilot project in Bangalore. The company clarified that nationwide expansion will depend upon the operational success of this pilot as well as regulatory approvals. Now let's discuss today's quarterly earnings. BHEL reported revenues from operations of 7,697 crore rupees. This is up from 40.29% year-on-year, while decline in 37.47% quarter-on-quarter. EBITDA stood at 718 crore rupees, growing 9.33% year-on-year, but declining in 63.47% quarter-on-quarter. EBITDA margin came in at 6.69%, improving sharply from negative 9.54% year-on-year, but lower than 14.38% quarter-on-quarter. Net profits also stood at 376 crore rupees compared to loss of 455 crore rupees last year, while declining 70.8% quarter-on-quarter. Net profit margins improved to 4.89% from negative 8.30% year-on-year. Overall, these results appear neutral because Q4 generally remains the strongest quarter for the heavy engineering companies due to year-end project executions. But in the year-on-year also there is some decline we can see. So that's why I said neutral. Next, Polycab reported revenues of 8,209 crore rupees, growing 39% year-on-year, while declining 7.39% quarter-on-quarter. EBITDA stood at 1,081 crore rupees, growing 26.15% year-on-year, but down from 6.89% quarter-on-quarter. EBITDA margin came at 13.17%, improving slightly over last quarter, but lower than last year. Net profit stood at 796 crore rupees, increasing 32.84% year-on-year and 1.41% quarter-on-quarter. Net profit margin came at 9.70%, slightly below than last year. Overall, despite strong revenue growth, pressures on margins and profitability makes these results slightly disappointing. Next, ITC Hotels reported revenues of 936 crore rupees, growing 14.77% year-on-year, while declining 25.3% quarter-on-quarter, which is quite normal due to seasonal business trends. EBITDA came in at 352 crore rupees, growing 18.06% year-on-year. EBITDA margin improved to 37.61%. Net profit stood at 181 crore rupees, increasing 36.05% year-on-year, while declining 42.69% quarter-on-quarter. Net profit margin expanded to 19.43%. Overall, considering the seasonal nature of the hotel business, these results can be considered good on a year-on-year basis. Next, Sterling and Wilson reported revenue of 1,590 crore rupees, declining 9.74% year-on-year and also 18.27% quarter-on-quarter. EBITDA stood at 98 crore rupees, increasing 11.44% year-on-year but falling from 50.23% quarter-on-quarter. EBITDA margin improved to 6.22% year-on-year but remained significantly lower sequentially. Net profit came in at 53 crore rupees, growing 37.68% year-on-year while declining 62.38% quarter-on-quarter. Overall, considering market expectations from the renewable energy sector, these results were quite disappointing. Next, South India Bank reported total income of 3,007 crore rupees, growing 0.78% year-on-year and 2.1% quarter-on-quarter. Gross non-performing assets declined to 1.38%. compared to 3.15% year-on-year and 1.43% quarter-on-quarter. Net non-performing also declined further to 0.26% compared to 0.68% year-on-year and also 0.29% quarter-on-quarter. Net profit stood at 377 crore rupees, increasing 17.2% year-on-year while declining only 7.3% quarter-on-quarter. Net profit margin improved to 12.56%. Overall, except for a minor sequential decline in profits, almost every business parameter showed strong improvement, making these healthy quarterly results. These were all the major companies that announced their results at the time of recording this video. I will cover the remaining earnings in tomorrow's morning pre-market report. So these were all the important market updates for today. If you found this today's report useful, don't forget to like, share and subscribe to Stock Market Meridian. I will meet you again tomorrow morning with another pre-market report. Until then, thanks for watching. Signing off. Bye bye. Jai Hind.